Their lecture in personal finance. I'm Jim Munchbeck, and I'll be your coach, your facilitator, your instructor, or if you're a student at the Bauer College of Business taking my course, I'll be your professor for today. And this is 8 November, year of our Lord 2025. I can't believe it's already November. This semester for me has gone fast. And I'm not complaining about that because this is the last semester I'll be teaching before I take my sabbatical for 1 year from teaching at the University of Houston. Been doing it for nearly 15 years. It's been a great experience, and I appreciate all of the support and all of the great times we had in the classroom and online ever since COVID. So anyway, that's my story, and I'm sticking to it. It is 10 a.m. Again, 8 November, year of our Lord 2025, and we're going to talk about tax allocation, or another idea you might consider is tax advantaged investing. So if you haven't memorized the three laws of personal finance, let me just jump in and tell you what they are real quick before we start. The first law of tax advantaged investing, no, the first law of personal finance is the law of spending and saving. And the law is spend less than you earn so you can save more for what matters most. That's the first law of personal finance. And it is the most disregarded law of personal finance in the history of the world, especially in the United States, especially in America, where we believe we deserve whatever. And we can use credit cards to buy it. And that's the whole point in this course. It's like the fundamental bedrock uh, rule for living in terms of financial planning and money management is the first law of personal finance, the law of spending and saving. So I hope this semester you thought about that, and I hope you did something about it. I hope you turned that first law of personal finance into an action plan for yourself to put some money away in an emergency fund. That was one of my hopes for you this semester and every semester for every student who takes the course. The second law of personal finance, and I should find these three laws of personal finance somewhere and let them bounce around on the screen while I say them to you. If I could find that, I would, but I'm not saying it. Uh, and you could, let me just show you what I'm looking for here. I'm looking right there on this list of stuff. And if I scroll down, I should find three laws. I'm looking for, I wish this thing had a search feature that I could just jump in and I could find three laws. I know I'm getting close. Look at this. This is three laws. Let me see if that's the one. Yeah, that's the three laws of personal finance. And so let me just jump back in and tell you what those are. You got the first one right, the law of spending and saving. The second law of personal finance is the one we're going to talk about today, which is the law of tax advantaged investing. The IRS actually makes the law, they make the rules. Our job, and what I hope to teach you today, is how to take advantage of the law. So I posted on Facebook, which I rarely ever do. Um, I posted this little, let me see if I can post it again here. I'm going to try to create a note. ah, you know what? I think I better stop playing and get to it. So, the second law of personal finance is the law of tax advantaged investing. The third law of personal finance is, I think, the most important one, and it's not that technical, but it's the law of purpose and commitment. So I hope you've committed to make some changes, take some steps, some action in your life so that you can achieve something significant with your money. Um, Today, I'm going to kind of wrap it up. Today's lesson is pretty pretty simple. Uh, at this point, you've built a pretty good financial plan. You've built in Right Capital. You've added a lot of data cards and you've created something very nearly close to a comprehensive financial plan. And today we're going to kind of put the finishing touches on that before we get to your capstone assignment. And I want to talk a little bit about the capstone assignment just for a minute, and you'll see why in just a minute. About 30 seconds from now, you'll understand why what I'm about to say is important if you want to get full points on your assignment this upcoming week. So, the capstone assignment, as I've said many times, is the assignment where we put it all together, all of the assignments that you've done throughout the semester, especially relative to Right Capital. Those assignments and those data cards that you've built into your financial plan, they will all show up in your capstone assignment. So I want to make sure you know a couple of things about the capstone assignment. And I want to also make you aware of this offer that I make every semester. I've been making this offer for a few semesters. It is the capstone tutorial. And to request a tutorial, this is a way for you to get all of your questions answered. So if you've struggled with certain assignments throughout the semester, you will be basically reproducing those for your capstone assignment. So now's a really good time between now and 2 weeks from now. It is for November, year of our Lord 2025, and you have 2 weeks from today to submit to me your capstone tutorial request. And so on the screen, you can see what you need to do to request a tutorial. One of the key things is you've got to give me permission to create a video using your financial plan in Right Capital. I'll take your questions. You outline your questions to me. You send me screenshots from your Right Capital financial plan and show me the area that you're questioning, the area of your financial plan that you're not sure what's going on and you need a little help, a little coaching, a little tutorial. So you send me that in a PDF, just like you do every week in your assignments. You're going to create your own document, basically with your questions, outlining as clearly as possible what you're struggling with, what your questions are, and then give me screenshots and send me that PDF and give me permission, just say in a sentence at the beginning or the end that you're giving me permission to create a tutorial to share with the cohort. So please don't send me a list of questions without doing that. Like, I'm not here to do your homework for you, but the capstone tutorial is kind of a way to get me involved with your homework in preparation for the biggest assignment you have the entire semester. The capstone is worth 200 points, and there are lots of ways you can get deductions. So I'm going to cover that in each of the tutorials that I do. I have so far, one student who's requested a tutorial. So I have that student's questions. I'm going to try to not show the student's name as I do the tutorial. I'll do the same thing for you, but I can't promise your name won't show up somewhere in that process. But the tutorial is a way, again, the capstone tutorial is a way for you to get your questions answered and a way to help the rest of the cohort. Because if you have questions at this stage, if you have questions, probably there are some other students who also have those same questions. So as we've done every week, I want to share this week's secret class collaboration screenshot or conversation that I want you to have with one another and with me. And you get to leave your comment in Money Study Group or right down here in the description or the comments, rather. If you're watching on YouTube, we are live on YouTube, Facebook, LinkedIn, Twitter, X. maybe some other places. But if you're watching on any of those platforms, you can leave a comment and engage in this conversation for this week's secret class collaboration, which is drum roll. I wonder if I can do the drum roll. I can do a bicycle horn. I don't know if you heard that. Did you hear that? Yeah, it looks like you heard that. I think I have a drum roll. Let's see. There we go. I'm getting so much better at the technology here. You can probably not see what I'm doing because I don't have my back camera on, but this week's secret class collaboration conversation is what I just talked about. I want you to tell me what you need to do to request a capstone tutorial. Okay, I just explained it to you and it's been on the screen. So if you missed it, rewind, hit the back button, watch it again, and leave your comment. You can leave your comment and you can leave your answer to that class collaboration question here in the comments or in Money Study Group. Just tell me, and really what I want to know is not just how do you submit your capstone tutorial, but I really want to know, actually, I'm asking you to share with me kind of your perspective of the idea of the capstone tutorial. Do you think it's a good idea? Is it something you would want to take advantage of? Are there reasons that you wouldn't want to do it other than it's just going to take time? Because it's kind of like you doing an extra assignment in order to get the assistance from me in your assignment. But it really is a big help. I think it's a lot of fun. It's lots more engaging. And that's one of the reasons why teaching this course has become quite the drag to me because it is so difficult to get class participation. I mean, these class collaboration weekly secrets, they're just to ensure that you're watching the lectures, and many of you don't even think you need to or want to, and I get it, but it is what it is. And so actual class engagement, is very difficult in an asynchronous course. And frankly, I don't think I want to do it anymore. This is my last semester before I take a sabbatical. I haven't announced my decision yet, but if you haven't been paying attention, uh, you may figure it out that teaching online, which is something many of you want, is something that is more difficult than teaching in a classroom. When you show up with, your person in a room with a professor who has eye contact with you and we get to have conversations, that is way better, in my opinion, than me talking to this camera. So just so you know. So this week, I'm asking you to help me out. Do a little extra, give it a little extra effort, and at least tell me how you feel about this idea of the capstone tutorial, because it gives you an opportunity in terms of, the biggest assignment this semester, the capstone assignment. It gives you an opportunity to engage and get some clarity around any of this semester's assignments that you may have struggled with. So I hope you'll do that. It's kind of fun. I can jump right in your plan and answer your questions pretty quickly, and it would be some extra content for me to create, but I'm happy to do that because I really do want you to have the best learning experience you could have at the University of Houston. And for years, students have told me how much this class made a difference for them, not just during the semester, not just right after the semester, but years. I mean, I've been teaching this for almost 15 years. And so I'm thrilled and thankful for that. I just think I should be honest with you that the online stuff is getting thin, in my view. It's getting challenging. And that's one reason that Bauer College has asked all of us to move our courses in person. And frankly, I don't really love the idea of driving onto campus every week, a couple times a week, and finding parking. It's just, I like online courses the same for the same reasons you do, probably. They're easy, they're convenient, they're on demand. So I like that, but the truth is, it is, it is what it is. And you guys have shared with me how you feel about online courses, and I appreciate that. But at the end of the day, it is different. And teaching is something I love to do, but teaching to a plastic camera, it's a little different. And so I hope you appreciate my candor and my honesty about what it's like for me to be on this side of the gizmo. And I hope that on that side of the gizmo, you're having a good time. So here we go. Okay, so that's the class collaboration. Is just talk to me a little bit about the capstone tutorial and how you feel about that. Okay, so here we go. Now this is my iPad. It's working this week, thank goodness. And this is posted, a link to this is posted in the comments. So if you want to go to what you're seeing here, that's where you go. Just jump into the comments and grab that link. Um, this is a post on WordPress at missionalmoney.com. And this is really kind of a copy, a mirror, a replicate of what you have in Canvas. So your assignment this week, this is kind of what it is. And that's what we're going to talk about for the next few minutes. But I also wanted to mention, in addition to this piece of content, you have plenty of information inside of Money Study Group, and that is your reading assignment this week. And I hope you'll do that, because I want you to really get to know, I want you to be able to benefit from tax advantaged investing. And to do that, a couple of things are going to happen this week. One, you're going to update your financial plan with the proper tax allocation. That means you're going to show me that you've been paying attention in terms of how your financial plan evolved over the last several weeks. You made yourself 10 years older, remember. You you did some research to figure out how much money would you make if you got that dream job that you want in your field of study. And so you figured out how much would you earn. And then at that same company, you figured out what is the 401k match. And so with all of that information, I asked you just to go out there and do some rough calculations and figure out how much would you have in your 401k if you started saving 10 years ago. Okay, it's not that complicated. I know it's confusing for a few of you, but most of you get it and you're doing a great job. And I hope those of you who get it are checking in and group me, answering questions and helping other students who are struggling with the mystery of how do we do this. But it's really pretty simple. You're 10 years older, therefore we're pretending that you've been earning good money for 10 years, and during those 10 years you've been saving that money, and you've been saving that money in the most tax advantaged way possible, which starts with the perfect investment. So let's jump in and let me do a little bit. Hopefully this will all work. So we're going to start with, I'm going to get rid of that. Nope, sorry, pushing buttons. There we go. So we got a lot going on that screen. But what we have is, I'm going to start to just push some buttons here. So the 401k, we've talked about that a couple of times this semester. Hopefully you understand that the 401k is a type of account. 401k is actually the chapter header in the IRS code. So 401k, it's the most popular retirement type of account for most Americans, and it is set up through your employer. As an employer, I set up a 401k plan. My employees get to participate in that, or they can choose not to. I'm hoping you will choose to contribute to your 401k because you get this match and it's a beautiful thing. So that's the 401k. We're going to you're going to learn a little bit about a Roth IRA, which is the only tax-free investment I know of. It is a great deal. You're going to learn a little bit about tax penalties. What happens if you decide, after funding your 401k or your IRA, your tax deductible IRA, or even your Roth IRA, you decide you want to take the money out that you put in. There are some penalties, and they're big penalties. You pay 10% of just the amount you take out, plus you pay the taxes that you previously deferred. So you just don't want to do that. I want you to just be a little bit familiar about plan eligibility, meaning who qualifies for these. And then I want you to, this week, do some work, and you'll see the instructions in Canvas, how you set up your plan for the uh, tax allocation, which basically just means you've got some buckets. You've got your 401k, which is a big bucket, and you'll get to see me talk about buckets. I use the illustration of buckets because 401k is a larger bucket than a Roth IRA. And you're going to learn, you're going to have a quiz where you're going to have to share with me what you learned about these types of accounts. But a 401k is a large bucket because you can make big contributions to your 401k. The Roth IRA is a smaller bucket because you can make smaller contributions. And today there's this new thing, relatively new, called Roth 401k, which is fantastic. So you might want to do a little research to find out if your company has that feature built into their plan. Most companies do now. So that's a cool thing. But these are all types of accounts. The main idea that I want you to know is the difference between a taxable account. That would be the big blue bucket. You can fill up a taxable account. There are no limits. But whenever you sell something in a taxable account, you pay taxes. The beautiful thing about a tax deferred account, if you buy, let's say you buy Apple stock and it's way low, it's had a nasty pullback, and then you sell it years later and it's tripled, quadrupled, you sell it, you don't pay taxes on that, the sale of that Apple stock, if it's in an IRA or a 401k or a Roth IRA. But if it's in that big blue bucket, that big taxable bucket, then every time you make some money trading some investments, you pay tax on that. So let's see what else. I think I want to go here and talk a little bit about, we talked a little bit about types of accounts. That's very important. Remember, the 401k is the perfect investment. So let me see if I can get to 401k is a tax deferred and tax deductible. And it's the most common retirement, the type of account there is. Now you have other similar types of accounts if you work for a nonprofit. Let's say you work for the University of Houston or a school or another educational institution. You will have something called a 403b. Again, that's the title of the chapter title, code, header, and the tax code. Okay, that's where you would find it. 403 subparagraph B, 403B. It's very similar to a 401k, but it's for a different type of organization. And then if you work for the government, I think it's a 457B, maybe. The government has more than one type of plan, and I don't expect you to be an expert. I just want you to understand that you have these types of accounts that are set up by employers, whether it's a for-profit, a nonprofit, or government. And those types of accounts give you the ability, if you work for one of those organizations, those types of accounts give you the ability to fund your retirement with tax deferred contributions. The next thing is an IRA, which is also tax deferred. It's very similar to a 401k, except IRA means individual retirement arrangement. So most people would say IRA stands for individual retirement account. And I'd be like, okay, cool. But the truth is technically individual retirement arrangement. And then we have the Roth IRA, which is the only tax-free type of account there is. Again, there's taxes and penalties that, I just want you to be aware that this is true. What I don't want you to do is start out in your investing career putting money into your 401k, which is the perfect investment. Yeah, they say there's no such thing as a perfect investment, but I believe the 401k is really the perfect investment because you get a match typically from your employer. So if you put in, let's say you make 100 grand a year and you put in the maximum you need to put in to get the full match. Let's say you work for at one time, I believe Shell Oil paid an 8% match. So let's assume you make 100 grand, you work for Shell. How much do you need to put into your 401k in order to receive that full match? We talked about this earlier in the semester, but just so you know, if you make 100 grand and you put $8,000 into your 401k, Shell is going to turn around and they're going to put in $8,000 in your 401k. Now, how much do you have in that year? How much do you actually have in your 401k account? You have not 8,000, which is what you put in, but you have the other 8,000, which is what they put in, which totals, by the way, $16,000. And ironically, if you look at Dave Ramsey's baby steps, the sixth one, there are 7 baby steps, and number 6, I believe, is to invest for retirement up to 15% of your income. And that sounds really hard, but hopefully by now you recognize that 15%, saving 15% towards retirement, especially if you have a match. I mean, look at that. If this scenario was you work for a company that has an 8% match and you make 100 grand and you put 6 grand in and they put 6 grand in, that right there is, what is that? That's 16%, right? 8,000 and 8,000, 16,000 of $100,000 income. That's 16%. So it's not that hard to do if you just have a plan. And that's the whole point of this semester, is to help you have a plan. And this week, you're going to take that plan and you're going to put some actual meat on that bone in your Right Capital financial planning portal. You're going to go into your accounts, into profile, and you're going to make sure you have your 401k set up and you're going to have a balance in your 401k. And I'm not going to tell you what the balance should be in your 401k. What I'm going to tell you is I'm going to remind you that you are 10 years older, and I'm going to remind you that you're pretending that you nailed that job and you got to figure out how much that job pays. And then you should do a little research to figure out how much the company match was so that you can decide how much are you going to contribute to your 401k. And over 10 years, you get to decide based on what you've learned this semester, how much money has accumulated in your 401k account. So you've been contributing for 10 years. Your company has been matching for 10 years. The funds have been growing or shrinking for 10 years. What type of asset allocation did you set up last week in your accounts? Because that's going to make a huge difference in the value or the balance in your account. So the same thing is true for your 401k and for your Roth IRA. How much could you have contributed to a Roth IRA? You're going to know that if you do a little homework. How much can you contribute to a Roth IRA today? That's the question I would pop in to Chat GPT or Google, and I would get an answer. And then I would go, okay, but I've been doing it for 10 years and my investments have been allocated in such and such a way. You should know what that means by now. How much did it earn? So that's your homework assignment this week, is tax allocation. You're going to allocate. Make sure that your financial plan represents that you have money in a 401k, that you have money in a Roth IRA, and then you also have money in a taxable account. So we got the big blue bucket, the big brown bucket, and then the little gold bucket, which represents the Roth IRA, the tax-free Roth IRA. And there are some rules, boundaries, and limitations, and I don't want you to be an expert, but I would like you to know what that they exist and what a few of them are. So that's the 401k, the Roth IRA, again, tax-free investing. Eligibility rules, boundaries, and limitations, tax penalties for early withdrawals, and that's that. Okay, so let's see what's next. I think we've covered the 401k plan. We covered a little bit about the Roth IRA. We talked about penalties. You're going to have to do a little research to figure out about eligibility. But the main thing you need to know about eligibility, and this is on the test, this is in the quiz, you have to have earned income. And so that's one of the things you have to know about eligibility. Let's see. So I started out talking about just the fact that uh, tax allocation is part of tax advantaged investing. And I know a lot of folks who they don't like, uh, they don't like to put money away because it's away and they can't get to it. And that's true. If you put money in a 401k, you're putting money away and you can't get to it. If you're young, under 59 and a half, you can't go and take that money out. And if you do, you're going to pay stupid tax. Stupid tax is expensive. And if you want to pay stupid tax, well, you will have lots of people you'll have lots of company because a lot of people do it. And it's just paying stupid tax when you pay a penalty of 10% on taking money out of your 401k. And I hate to say that because I know a lot of people who have done it and it's a, something they typically regret, but they get in a pickle, they get in a situation because they haven't done enough planning to know what's coming. And then they get in a pickle. They don't have an emergency fund and they end up having to pay a stupid tax. And it's a big one. So don't do that. Um, I think Let's see. I think we're pretty close to wrapping things up. Um, so we talked about the Roth IRA. We talked about the 401k. Uh, let's see, what else do we have here? I think we covered everything. Um, yeah, we pretty much covered everything. So let me go back to, let's see. I'm going to go back to my iPad and just take a peek. I did mention let's see. Oh, yeah, don't forget to subscribe. It doesn't cost you anything. If you hit the like button, it really helps the channel. You hear that every time you watch a YouTube video, and you probably don't expect to hear it from me because this is personal finance. But what I want you to do, what I want you to think about is this is my last semester to teach before I take a sabbatical, and I will be announcing what's coming next. And if you want to hear what's coming next, then you want to subscribe to the channel at Jim Munchback. Munchback has an H on the end. Hit the like button if you like the video. If you want to see more, that's how the algorithm works. Not only does it help the channel, it makes more people see the channel if you hit the like button and if you subscribe, and especially if you leave comments. So please leave a comment below. Tell me you don't like the sound of my microphone or that I have bags under my eyes. Just leave a comment, anything. It'll help the channel. And I want to grow the channel because there's some things I'm going to be doing coming up that I think you might benefit from, you might like, you might appreciate. So if you think that may be possible for you, hit the subscribe button, hit the like button, leave a comment, and thank you, thank you, thank you. Okay, that was that. Uh, I did want to mention though in the hold on, I got the wrong. Got to get rid of that. I think I pushed too many buttons here. Okay, there we go. So in the playlist, and you can find our playlist for this semester at uhplaylist.com, you're going to notice that when you go into Canvas, there's some videos that were posted in your assignment, which is already available. You may have already seen it, and they may not be available in that Canvas. I'm not sure what happened, but apparently those videos got moved and moved into the archive. So I went and found them, and I saved those videos. There are two of them. One is Cramer, and one is, I can't remember the guy's name, a young man who talks about uh, building wealth in a Roth IRA, a 401k. That's really the content this week. But I thought you'd enjoy watching those videos. Jim Cramer's crazy man. Uh, he's interesting. I wouldn't say I like him. I don't dislike him, but I don't really watch him, except I saw that he did this video on Roth IRAs and I thought you might enjoy it. So, anyway, yeah, those videos have been saved in the playlist. Not sure how long they'll be around, but they're available today. Check them out. Please don't send me an email and tell me that the videos that we linked into your Canvas assignment are no longer showing. If you do that, I'm not going to reply to your email because I'm telling you now that they're not, they're like, you're going to get an error code. So instead, I posted them in the playlist, and I hope that you will share that and group me for students who didn't listen. There's a couple students who just don't listen. I don't think they ever will listen. That's what I say about myself. I don't listen. I never have, and I never will. It's a problem. It is a problem. I do try, but it's a it's a pattern for a lot of humans. We don't listen, we never have, and we never will. And you know people like us who don't listen, who never have and never will, but we're working on it. Some of us are doing the best we can, and I hope you'll do the best you can and listen long enough to know that those videos that may be missing in Canvas are in your playlist. Check them out. And this video is not in the playlist, not yet, but I'm about to end and I'm about to go do something fun today because it's a beautiful day in Houston, Texas. And I'm going to be preparing to do some capstone tutorials, I hope, but that's up to you. I hope you will send me some capstone tutorial requests so that I can do those as we wrap up this fine semester, which is quickly coming to an end. We really only have one more assignment after today besides the capstone assignment. So as we wrap things up a little bit early this morning, let me just tell you what's coming. So next week, not this week, but next week, uh, we will we probably won't even have class. I mean, I may post something for you to watch, but I don't know that I'll be here at 10 a.m. on Tuesday because the only assignment that we have remaining after this week's assignment is the blueprint assignment. It's assignment number 12. And that's the assignment that I've been telling you about all semester, that if you've been turning your assignments in early, and let me see, can I see an early assignment? Early assignment. I'm looking for early assignment. I'm not seeing it. Okay, yeah, it's in there somewhere. Let me just show you so you can see again. I wish there was a search feature right there, but I'm scrolling up there. This is how many, if you see right there, that's how many things I can click on. Way too many. This is this one file, by the way, for this is Ecamm Live that I'm using, and this is called a profile. And this one profile is like 30 gigabytes. That's how much content is in here. So what was I looking for? I was looking for, uh, now I forgot what I was looking for. There's the blueprint assignment. Let's just see what that looks like. Okay, that's the blueprint assignment, but I'm not gonna. Uh, okay, I forgot. I forgot what I was even looking at or looking for. That's not good. You know, that may be a pretty good indication that I've been doing this too long. Not sure, but Anyway, I'm sure it'll come to me what it was I was going to show you. So I'm wrapping things up, and I wanted to tell you the blueprint assignment is coming. The blueprint assignment is one where, oh, I know what it was, early assignments. If you've been doing that, you know what the benefit is. You get extra points, and along the way, you got a little feedback from me so that you could make updates, corrections, and still keep those points. But at this point, it's, you know, do your assignment early this week. That'd be great. But the next assignment, the blueprint, the final assignment, if you've got enough points at this point in the semester to not need that assignment, then it's optional for you. I hate to say that it's optional because we have a number of students, about 25% of them, who need the points. And you know what they're going to do if I say it's optional? It is optional for you if you have a lot of points. But if you don't, it's not optional. And so they will tell me, those 25% who don't have enough points, who haven't turned assignments in early, who missed a lot of assignments, they'll tell me that I said it was optional and they won't do it. And then they'll want to do it, a month from now. And I'll be like, nope, not happening. But for the rest of you, the ones who've been turning your assignments in early, thank you. You're awesome. And you don't need to do next week's assignment. And that's a good thing because the assignment next week has a little feature that is somewhat of a challenge. And that is, you were asked at the beginning of the semester to track your expenses for the whole semester. And you're going to have to do that. If you turn in the assignment for next week because you need the points, I'm going to require you to show me all of the data for all of your spending for the semester. That's number one. Number two is, I want you to give me categorized like a budget, like show me the expenses by category. Whatever app you use to track your expenses, that should be easy. If you used Excel, you're probably going to get deductions because you're probably going to miss a whole lot of entries, and you're going to send me a few and tell me that's it. And I'm going to be like, yeah, right. So hopefully you used an app like your bank app. It's going to capture every transaction. If you use a debit card, it captures everything. Then all you have to do is go into your app and export the list, and it's going to export it in categories. And that's what I want. So that's one, the data. I want to see the transactions. Number two, the categories. Number three is what did I learn? Where am I spending money that I don't need? These are all parts of next week's assignment. Since we're not going to meet next week, I figured I'd tell you now. If you need 950 points to get an A in the course, we still have the capstone, which is 200 points. So if you've been turning your assignments in early and you've been getting 60 points every week, you have a lot of points. And you can be confident that you're not going to get any big deductions on your capstone. Okay, because you did all of the assignments correctly and you're basically just putting it all together, so you'll be good to go. You can blow off next week's assignment. Don't do it because it's going to be more work than most of the assignments are. I'm telling you. So it's a gift. Take it and don't bother with it. And then we have class collaboration. So if you've been doing, if you've been getting 60 points or 50 points every week, that means you have not been getting deductions for missing the class collaboration points. And if that's the case, then I owe you 200 more points. So what I'm trying to tell you is jump into Canvas, see how many points you have, understand that you have 200 for the capstone, 200 for the class collaboration. That's 400 points that will be added to that number. So you decide whether or not this next assignment next week is optional. It's up to you. If you don't have enough points, it's not optional. But if you do have enough points, way to go. And that was my hope and my intention all along with the early assignments for those students who were willing to make this course a priority in terms of timing of the assignments. For those of you who did that, my gift to you is that you don't need to do the last assignment, number 12. You do need to do the capstone. Everybody has to do the capstone. You get 2 weeks to do the capstone. But we have this week's assignment, number 11, tax allocation. Next week, we have the assignment that for some of you is optional, which is the blueprint where you capture all of your spending for the whole semester. And then 2 weeks after that assignment's due, the capstone assignment will be due. So that's what's coming. That's where we stand. One final reminder that the capstone tutorials are due no later than 2 weeks from today. So that gives you plenty of time to wrap up this semester, this lesson, next week's lesson, and then to start to review the capstone assignment. I will post that capstone assignment soon, like next week. As soon as we get through next week's assignment, I will post the capstone assignment so you can start to, in fact, yeah, next week I will post the capstone assignment so that you can start to review it and prepare for it. And if you have questions, if you're befuddled or puzzled, then I would encourage you to send me the capstone tutorial request. So don't forget, that is this week's class collaboration conversation, is not just how do you do that, but how do you feel about that? Like, will you do it? What would make it better for you? I really want to know, because when I retire from teaching, that's going to be one of those burning questions that could keep me awake at night wondering what could I have done better for the capstone tutorial. Yeah, that really won't keep me awake, but I am asking you to share that with me if you don't mind. So there you go. And now it's 10:46 a.m. on 4 November, year of our Lord 2025, and that's it for this week. I'll see you next time. I'm going to go ahead and hit the finish button. I'll be looking